All right. Welcome to the market strategy session for the week of May 25th, 2015. But of course, May 25th, we are closed the market is closed for Memorial Day. Want to wish everybody who served in the military and who lost somebody in the military, wish them peace today, on their mind at least. Got yelled at for saying Happy Memorial Day a couple of days ago, so I'm not going to wish anybody a Happy Memorial Day anymore because there's nothing to be happy about. That's what I was told. Okay, very good. Anyway, if you know anyone who served in the military, be sure to thank them for days like today. So, in case you didn't know, we have rolled out the Winning Edge Trader Inner Circle, and we still have the pre-rollout special offer. Go to www.winningedgetrader.com/special-offer, and you can read all about it. We have a month-to-month plan at the very low price of only $87 a month. We also have a yearly plan that gets you 2 extra months, so you actually get 14 months, and you get an hour of coaching with me, and we allow you to do a 4-pay on that if you'd like to do that. But you can read all about it, or actually watch my video and then make your selection at that website. But it all ends tomorrow. Tomorrow the pre-rollout deal will end, and the bonuses, including the list of 7 stocks that are set up for potential big moves, that's going to go away. And the Beating the Bear Market, or more appropriately, the How to Spot a Bear Market Before It Begins class, which we've been planning now for, it's got to be 2 years now, Paul, but there's just nothing been setting up. But now we're going to get out of the way in June to make sure everybody gets their bonuses, all the people from Mastering Market Timing and everywhere else that we've been promising that class. So those bonuses are going to go away after Monday, and then we're going to be raising the price. Price is going to be $197 a month. So if you want to get in at the $87 a month and lock that in forever, here's your opportunity. And of course, if you want to lock in the $997 for the year, this is your opportunity as well. The market is in a rising wedge, as we can see up here in the upper right corner of the chart. What does that tell us? Well, at first thing that people want to say is it's bearish. This is not necessarily the case with a wedge. A wedge is first and foremost a consolidation pattern first. It is not a directional pattern. A wedge in and of itself is not a reversal pattern. It is a congestion pattern. It is a pattern that is showing contraction in price. Now, a lot of people envision that a rising wedge does this and just falls out of bed. Hey, you know what? Maybe it will. However, there have been cases where rising wedges have expanded to the upside and falling wedges have expanded to the downside. So first and foremost, this is considered a consolidation pattern. Okay? Good? All right. Overall, we are now in the longest consolidation, maybe in history. If we end like this into the end of the month, CNBC says it's going to be the longest consolidation in history. As of now, it's like 110 years. Whatever. Does it matter? I don't know. It just means that it's a long consolidation pattern. And that tells us that a nice move is brewing. Paul and I feel that the move will be to the upside. However, that doesn't mean it's going to be an immediate move to the upside. See, even if the wedge does move down here, we'd still be in an uptrend. You can see here we're in a pretty strong uptrend for a number of years now. So even if we would go to the bottom of the range, Paul and I both feel that eventually it would still resolve itself to further upside. However, it would make for a sloppy, choppy rotation type market. There are still stocks to play, but you have to be a lot more. I don't, you always have to be careful. So I don't want to use the word careful, but I think it comes down to, rather than just when you have the wind at your back or the wind in your sails with the market behind you. If we're consolidating, then it's really important that you still take the top-down approach, but it becomes what do they call it, Paul? The stock pickers market, right?
That's a bit so. Anytime I hear the phrase stock pickers market, no offense to anybody, but I think the person saying it is an imbecile
Right. I agree.
because it's either always or never. There's a reason why 80% of all equity mutual fund managers can't beat the S&P.
85, by the way, but
Right,
okay.
right. And it really depends on what time frame you look at. It's so stupid. Here, if I had to make a chart of how a bull market evolves, right? So let's look at the current bull market. In 2009, when the market began to go up, all these geniuses said, tell everybody that, folks, this is a real stock pickers market because we're still in a bear market. All right, that lasted until the latter part of 2010 when everybody realized that we're in a bull market. And then they said markets had a huge run since off the bottom, that you got to be careful. And unlike the first part of the bull market where the rising tide lifts all ships and you just buy the crummies to crummy, now you should own only quality stocks and you got to be a stock picker. And that didn't work because then they trail. And then in the last third of a bull market, they say, the bull market's really mature. It's narrowing and only a few stocks are going to go up. So therefore, it's a stock picker's market. And yet, almost no matter what happens, the average mutual fund manager trails the S&P. To me, it's befuddling, mind-boggling. Yet the public just keeps buying that nonsense.
Bottom line,
Now I'm done tirading.
okay, but bottom line, it's always a stock pickers market. You'll always do well buying stocks out of good patterns, or you'll always do better picking stocks out of good patterns with good signals than you will just guessing. I
But
mean,
don't forget the part about managing risk. And
absolutely.
that's more important than anything else in the markets, in my opinion, anyway.
Oh, in everybody's opinion, and well, everybody who's smart, their opinion. Right. Risk is the only thing we can control. It's the only thing we can manage. We have no idea. If we bought the SPY Tuesday at the open, we have no idea. I could get my fib grids out. We could get our measured moves out. We could measure this box here, this consolidation, and it has to go this amount. We can get all that stuff out. We have no idea how far it's going to go. But what we can do is we could put a stop loss on, and we could know where our risk is. Now, that's one way to control our risk. The other way we could do, and this, is we could buy calls or we could buy options and know for sure what our risk is, right? Because whenever you put a stop on, there's a chance that it slips a little bit or we gap below it the next day. So you could pretty much define your risk, but with options, we could definitely define the risk. It doesn't matter either way. And with something like the ETFs, that's a good way to, using stops is always, you're better off because the chance of a really big adverse gap through it is rarer than with a regular stock that can have individual news. So the point is that risk now becomes really very important to understand here because we're so coiled up. Everybody's talking about it. You got people coming out screaming that a topping pattern is here. Every time we hit a new high, the whole way up, they're all screaming that this is the top. And now we're coiled up, ready to spring one way or the other here. And another thing about these, and then I'm going to hand over to Paul, is that we could also see a pitch one way that's a fake out and then a move the next way. And that traps a lot of people too. For example, if we were to spurt to the upside out of this pattern and the buying just dried up and instead we fell, we would trap a lot of people. We would catch a lot of people late to the party. And the market, as Paul will, I'm sure, confirm, always tends to catch people at highs and lows, the last highs and lows, because people love to get in late. They don't believe it, they don't believe it, they don't believe it, and then all of a sudden they get in and boom, it gets smacked. And the bears have been hurt pretty bad on this way up. They've been caught pretty nicely. So are the bears going to capitulate and finally go long? And what happens when that happens? I mean, what are the sentiment indicators saying right now, Paul?
Sentiment is remains at dangerous but not bull market killing levels. So to dovetail, maybe to segue into my comments, and you can leave that chart up for a minute. The action of the last couple of days, well, maybe last a week, while it looks like in a vacuum a clear breakout to the upside, and price always wins. I mean, I'm a big believer in looking at a breadth of indicators, but price is the final arbiter. It looks like a clear breakout. However, not only wasn't volume good, it was downright poor, which I'm not a volume person, but it was poor. And the sentiment is pretty bullish, which doesn't support a sustained breakout and run to the upside here. If it does, okay, so be it. But if you really want to catch people off guard, both times, what the market would do would be to have either one more pop or immediately pull back here, and as Tiny drew that purple arrow, immediately head towards the lower end of the range on almost no news. That's how you'll catch people. I do believe if you go down towards where Tiny drew that purple arrow, I do believe you will turn people bearish very, very, very quickly. I don't believe people are standing there ready to buy. Just my non-scientific chat with some folks whom I've met doing media lately, myself and Matt McCall are like the only bulls. Everybody else can't wait to be bearish and negative. And there's no data to support that. So I think if you somehow get sentiment back to okay levels, I think the market blasts off. I just, Tiny, give me this controls. So this week I wrote a blog. So there we go. And you can see how many times, essentially in this year, last 5 months and change, bulls got rejected at small new highs. 1, 2, 3, and this would be the 4th time. And I don't think the bulls are going to be resoundingly rejected. I just think that because sentiment is the way it is, and I'm frank, I'm not bearish by any means. I am bullish, and I have a lot of bullish positions on, and I'm willing to sit through a pullback. I do think if the market does pull back somewhat deeply here in the short term, the bears will be all over this. Bulls will jump ship really quickly. You'll build up some good sentiment readings, and then we can explode to the upside in, I don't know, a month or two or whatever it is. So I still believe pretty strongly that the ultimate resolution of whether you're looking at this trading range for 3 months or 4 months or this giant one for 7 months, I think ultimately we're going to go significantly higher. And it just may take some time to wear down the bulls. Let the weak-handed people throw in the towel and wear that off, and then you get a better move from lower levels. So that thesis of mine, which I've had essentially all year, hasn't changed. Tiny, you want me to go?
Oh, you got the controls now, baby. I
Okay.
can't take them back now.
You,
Anyway,
you'll, but before I dive in, you'll appreciate this. At noon today, we started smoking baby backs, beef ribs, brisket, and then I grilled. It must have been half-inch, freshly thick cut bacon.
oh,
Yeah.
wow. And who came over? Besides not me.
No, it was a group that we do it with all the holiday weekends. Like I don't know, 8 families, 9 families. So I ate my face. I probably ate a pound of well done grilled bacon on my own. So, and then I sat around, drank beer, and relaxed.
Don't worry.
So
Rosh Hashanah is coming up soon. You can atone.
I'll repent. Don't worry.
I know.
And I did it because today is Shavuot.
Great. Very
All
good.
right, so I'll attack, and then you can come back in if you like to.
We're not doing Q&A anymore, so that's it.
Okay.
You're done. You
Okay.
take it from there.
So, and if you want to stay on and chime in, you're more than welcome to.
Okay.
Unless you want to go grab some ice cream for us.
I wanted to try this new flavor, but I think I'm going to pass. I'm going to the gym tomorrow. They're only open for 4 hours. So anyway, go ahead.
So my thesis is the same. Tiny and I are in agreement. Here's the Dow. And a lot of these are going to look the same. I mean, it's like watching paint dry. I sit around, like today I sat around, and yesterday at my kids' games, and people say to me, "How's work? What's going on in the markets?" And I say, "It's like watching grass grow or paint dry. This is among the quietest periods in 26 years I can recall." And we know the adage, never short a dull market. Does it always work? No, but it works a lot of the time. And I do believe you don't short a dull market because you normally get better setups to get short. So do I want to get a setup to get short for a move down here? If I'm a short-term trader, yeah, I would love to catch this move. I'm positioning a little more intermediate term because I think the intermediate term indicators still favor significantly higher prices. If this was a bounce out of a bear market that looked feeble, then I would be aggressively getting short. Big difference. So there's the Dow. I mean, it looks like we're going to pull back. S&P, kind of sort of the same thing. It's been an unconvincing breakout. I still think we're going to go higher. We probably go to 22, 2300 in the S&P, but I think we're going to pull back in first. Mid caps look a little stronger. I mean, you really didn't get the price rejection here. Tiny would say this looks like a pretty good flag or pennant right here in the short term that could support another pop. Could we get it? Yeah. Are we going to get it? I don't know. I don't have a strong conviction that we're going to blast off to the upside here. Russell 2000. So here's a clue. Houston, we have a little bit of a problem because it is nowhere. Well, I mean, it's a day and a half away from there, but it looks clearly weaker than the other indices, and you want to see the Russell leading, not lagging. And the S&P, I'm sorry, the Qs, the pattern looks a little different because of the breakout back here, but I think it's the same thing. Could we pop a little bit higher, maybe to 112? Sure. Do I think we're going to 120 right here? I do not. I think we'll pull back, regather ourselves, and then take off. Here's Europe, which we talked about a lot. I own Europe in my conservative macro portfolio. I've owned it on and off all year. I've been bullish on Europe all year. I still think Europe ultimately resolves much higher. I mean, it's so hard to find people bullish on Europe. But nice double bottom, nice divergence. So two things lined up at this low. And now it looks like we're going to go back and trade towards the old highs up here at 62-ish. And everybody hated Europe coming into the year. and nothing really changed. They still hate Europe. I think they're nuts. Don't get caught up in the headlines about how bad things are. They're QEing not to the level that I think they should. I think they should QE double what they're doing right now, but okay. I still think Europe goes higher and looks okay. Emerging markets, you already know my feelings. I haven't changed in ages. I'm bullish. I think they're going to go higher, even if we pull back first down into here. Unless the dollar turns tail really quickly, you have a little tailwind in emerging markets. I remain long, the same I was long last week. China's one. I think China's going to go back to all-time highs on the FXI. The actual Chinese market's already there. I think this plays catch up, and we tick at all-time highs. I also own Hong Kong, which has been beautiful. Wish I owned more. I'm an idiot and didn't commit enough cash. Hong Kong is breaking out of this consolidation. We talked about this here for a good 2 months, so nobody can say they didn't know Hong Kong was going. We talked about this pattern. We talked about it. We talked about it. We talked about it. And boom, on Friday, it broke out. I think this is going to go much higher. And my Philippines holding, not so great. We did well up in here, and then it's been kind of crummy last couple of months. You could say this was a head and shoulders pattern, although I don't love head and shoulders on indices. In all likelihood, I'm going to blow out this position next week or two and then add more to my China and or Hong Kong holding. Let me just pause for questions. Let's see here. Don't we have a confirmed breakout? Johanna, I covered that. All the news I saw was that Scott. You said sentiment was bearish. Like Scott, if you show them, if you find those articles, send them to me because all my stuff, the option stuff, money flows, everything is overly bullish. I don't see almost any sentiment that's bearish out there. I wish I did. Looked like good sell-off at the end of the day Friday, Bill. Yeah, I don't know about a good sell-off. Here's the futures. So Friday, I mean, this is this is kind of in the realm of the day's trading range. I wouldn't really call it a good sell-off. 29, 6, 7 points. I mean, it looked like to me just an absence of liquidity. Everybody left early. David, I'm going to cover the dollar. I will cover EWJ. I will cover Russia. I'll cover bonds. Would you be heavier in large cap U.S. stocks or Europe, Jay? No, I like on a relative basis. I think Europe's a better play. So, any European country in particular, Johanna? I don't spend a ton of time on this, so I don't want to give you a totally flip answer. But I don't want to play the laggards. I want to play the leaders in Europe. And I don't think I have my list on this computer. Let me just check. Of course not. So, from memory, EWG is Germany. That's a leader. Here's Italy, kind of a leader. Here's Spain, not a leader. Let's see what else. EWK, Q. I think that's France. I think that's a leader. EWK looks really strong. That must be Belgium. That's a leader. I mean, to me, if I were going to go find some European countries now, considering that I'm bullish on Europe, VGK, I look for impulses like this and these little consolidations to get on board. That's what I would do. I would not play laggards. I want to play good ones in tight patterns because I think the ones that are wound up or have constructive patterns are going to break out in mass and strongly. All right. Let's see. EWC is Canada, Russia, Japan. Okay. Canada, EWC. So for my money, although this looks like a nice bottoming pattern, I think Tiny can comment on it if he wants to. And maybe it's something to put on a watch list to play Canada when, let's check out the Canadian dollar.
Yeah, cup and handles.
Yeah, I agree with you. I mean, this is one to keep an eye on, EWC. I think we'll have, there could be a trade here. Does it start here? I don't know. It certainly could start right now. I mean, it does look nice. Doesn't really obviously fit in with Europe, but this does look interesting. So I would certainly keep this on my buy list. I would not, for me, I wouldn't short this. If this fell out of bed here, oh well. Put a $0.50 stop in on the close and call it a day. But I like this pattern, EWC. Russia, I'll make the same comments I've made almost since the bottom. This was the time to buy down here when everybody was scared. Up in here, as you guys have asked, it's not for me personally. It's up, what, 60% from the low. You're right into the old lows. You're right into the gap close. If you played it down low, congratulations. You did a good job. Just tighten your stops. If you didn't, it's not a country that I personally want to get into right now. And Japan, which I've been bullish on since 2014 and took a lot of flack for it, I feel like I'm a little vindicated. So here is Japan. My thesis in early 14 was that this was going to resolve itself higher. I felt really strongly about it. Well, I did not see this coming. Another year going sideways, but I kind of held my ground, as you guys know. We've been talked about it here, and now we've firmly resolved higher. What do I think about Japan now? Intermediate term, I think Japan is going to go significantly higher because they're going to step up QE. Without the yen, here's DXJ. It looks. Let's do a little relative strength. Here is the DXJ against the EWJ. DXJ is currency hedged. EWJ has currency exposure. So here is the chart. Right in the here and now, it's a coin flip. I don't have an opinion which I'd rather take on, but I do think they're both going to go higher. All right. I think we just exhausted all the countries. Let me just make sure nobody else asked a question. Johanna said, don't forget the divergence. Johanna, where's the oh, at the bottom you're talking about? At the bottom, yes. If you're talking about this, I agree. I don't see any really divergence up here recently, but I agree. Greece, I mean, everyone is so sick and tired of this. Are they going to default? Are they not going to default? It's enough. It's exhausting. It's like dealing with when I used to have a 2-year-old. The ETF says they're not going to default. Right now, you're 20+% off the low, and the ETF is saying there is no default coming. Could there be an organized default? Sure, but the market does not sense any kind of calamity upcoming in Greece. Oops. All right, let's go on to my 3 key sectors. Let's go to the banks. No. Carry. Here are the banks. I do think the banks are the surprise sector to the upside for the rest of the year. I've said it before last couple of weeks. I still believe the same thing. I think the banks, I think we're going to have, for the first time really since 2006, we're going to have true bank leadership. So I think you can buy banks in the pullbacks. Period. What's KCE's capital markets? This is the Goldman Sachs Morgan Stanley ETF. Yeah, I think it's going to go higher as well. The insurance one, same thing. So all the financials to me look like the place to be, the second half of 2015. I think you can buy them into pullbacks. Don't be stubborn. Keep your risks small. But I think you can get a pretty good move second half of the year in the financials. The trannies, on the other hand, did not have a good week. I do believe, although there's no facts and evidence to back up my belief yet, but I do believe that this messy pattern is going to eventually resolve itself higher. If you just look at the chart looks sloppy and toppy and not anywhere where I want to be invested now, and that's why I'm not. But I think we're going to resolve ourselves to the upside. This week, I will do an article on my blog about the transportation versus the industrial. Talk about Dow theory, because right now you've got some pretty good Dow theory warnings. The big Dow theory would be if the Dow came down and took out the January low. That would give you a Dow theory sell signal on top of your Dow theory warning, which you don't have yet. And finally, the semiconductors, which I said for months, I still think we're resolving ourselves higher, and I still believe that today. Semis are going to blast off to the upside. Semis could be a powerful move. Don't underestimate. They've been wound up for a long time. Semis get above par, get above 100. I could certainly make a case that they're going up 20%. So keep an eye on some semis. So we've got banks look good, semis look okay, trannies not so good. 2 out of 3 of our sectors look good. Hard to get bearish on that. The indices, none of the indices are showing significant price deterioration or topping patterns. Hard to get really bearish right here. Stockcharts.com is down, or it was. Still down.
Yeah, they're updating. I know. I was looking for it today.
So the NYSE AD line still looks very powerful. No arguments there.
Hey, Paul.
Yo.
2 things. What is the cyclicals ETF?
ETF, I mean, I would say you can look at XLI, which is the industrials.
Right, or the basics XLB, right? But
the difference is, but you got to be careful because the XLB is materials that they have big emerging market exposure that the traditional smokestacks do not. The XLB is great when you come out of a big decline or a bear market. That's your leverage.
But wait a minute. What happened to the cyclical index, CYC? That's what I'm asking.
The Morgan Stanley Cyclical Index, there it is.
Wait, what?
Hasn't traded in a year.
Yeah, so there it's not, right? So you
know what happened? No, I think some of these indices started charging separate fees to get the fees.
No, that's not it.
You sure?
Yeah, 100%. There's no symbol for it. There's no symbol for it anymore. So, do you think they just went out of business? Boy,
No. They may not have had, because they used to be all optionable. So maybe that demand totally dried up.
The demand on the cyclical. So that's just it. They just stopped watching it. Is what you're telling me?
Unless you know for sure that Morgan Stanley didn't charge their own $5 a month fee for it, then they could have shut down the options, which means they're done. They don't track it anymore externally.
Okay.
I haven't looked at eSignal in a long time at their index.
No, universe. It's not on TradeStation either. That's why. And what's the home builders? XHP, right?
XHB and ITB is 2 of them.
XHB, right? That's the one. Okay, yeah, I got that right at least. Okay, all right. Bye.
So let's finish up the rest of the sectors. We did the semis. We did IGV, which is software, which has been a monster, a quiet monster. We talked about it. It continues to trade well. I mean, price is the final arbiter. So it's hard to argue with this advance. Are we overbought? Sure. We've been overbought many times. And all we've seen are mild pullbacks. This index still trades fairly well. IYZ, one of the sectors I thought would be a leader this year, has not stepped up yet. And it's up on a couple percent on the year, but this does not endear warmth. I don't like this setup. I don't think Tiny does either. It looks like this wants to drop out of the bottom of the pattern and maybe regather at lower levels. So I wouldn't want to go near this yet. Diversified financials, we already covered. Looks fine. Not as strong as banks, but they look fine. A lot of these indices I would rate buy into pullbacks. Consumer discretionary, we talked about all the time, the consumer not being dead. So here's where you got to divorce yourself from what you hear on TV all the time. The consumer is not dead. I see retail sales just like you guys do. I see new home sales and housing permits, and I see the negative news. That's not being translated into the stocks. So divorce yourself from the news. Look at how the stocks trade. XLY is still the market leader. XRT, the retailers, still strong, not as strong, but still not disastrous. Home builders, another sector of mine for the year. I mean, could you make the case that this is a nice big top? Yes, you could. I would argue against it. I think this ultimately is going to at least 40.
Yeah, it looks like a weekly bull flag to me.
Right here, or the whole big picture?
Switch to a weekly time frame, and then you'll see that looks like a big bull flag now. That congestion now looks like a bull flag.
I mean, they're certainly digesting this big move from 26 to 36. Yeah, I think this is going to go much higher.
Yeah, it looks.
Even if we pull back first, they may make it uncomfortable. And now you got summer starting, and although I don't think we're going to lose liquidity in June, but I think ultimately all these are going to resolve themselves higher. Healthcare, which is my biggest sector holding and has been all year, I think it still is pretty good. It's gone nowhere since the middle of May, but I'm holding on. Maybe we pull back a little more and then take off the upside again. I don't think it's done going up. Biotechs, as you all know, I've been long this what seems like forever, and I think this pattern here will resolve itself to the upside, and that's because something new. Here is the weekly chart of the biotechs. The biotechs are kind of bubble-esque, all right? When the bubble finally bursts, it's not going to top like this and go sideways. It's going to top like this and collapse. So this is not your typical topping pattern for a bubble. It normally peaks and then just collapses. This looks like it's digesting, and it's going to resolve itself to 400 on the IBB. XLI, I keep waiting for these stocks to step up. Even with the dollar pulling back, they're not. So I think you step aside and do nothing. XLB, I don't like. I think it's too late in the cycle, and not really interested. I do think, was it Caterpillar that looked interesting on the downside? Yeah, Caterpillar, which is in the XLB, it kind of looks interesting as maybe putting in a bottom on maybe running back towards these highs. Tiny, what a perfect example of a failed flag pennant, huh?
Well, not a failed one that didn't work because it never broke out first.
Right. It never triggered in your mind.
Right. Yeah, Caterpillar was nasty. But a lot of people, especially after it lurched over those moving averages, they were looking for upside continuation, and it just never came,
I would have too. Here, I'd have been very bullish on Cat. And then at this big candle, I would have said, okay, I'm out, goodbye, see you later. The gap of recognition was right there. Little island reversal, and boom, goodbye. Let's see, energy. XLE looks like, here's the encouraging part. We've gone sideways for a month and change. Stochastics are oversold. It supports a rally if it's going to rally right now. I'm still long the OIH. Oversold. It looks like it wants to bounce right here, so we'll see what happens again. Some defensive issues here. REITs, they still look awful. I mean, it's hard to get excited about REITs right now. Look, the Bears are clearly winning. XLU, utilities, again, hard to get excited about utilities. They look like garbage, similar to REITs. And XLP just keeps going sideways. Nothing going on in XLP. So, interestingly, the economic news has been really weak. GDP stunk, which I've written about, and I said here that I think Q2 GDP is going to be pretty strong, as is Q3, but Q1 stunk. All these defensive sectors, if that was really the case, should be trading a lot better, but they're not. So what does that tell you? It tells you the news is not right. The market's interpretation is what I want to watch and hang on to. Let's see, what else did I miss on the sector side? Oh, a couple of you guys pointed out to keep me looking at. C was one of them. The shippers definitely looks better than the IYT. So we have here's a subset that's strong. The airlines got murdered on Wednesday. I forgot what firm downgraded the airlines. It was all caused by, I think it was Delta, saying they're so busy they're going to add capacity. And that immediately sent everyone running for cover. Airlines don't look great. And there's that new ETF, Jets. It will take us a while to get on board. Let me just take a look at, here's the Internet Index. Looks good, still looks good to me. Social Media Index doesn't look bad. I mean, tech looks like to me, you get banks and tech going at some point later in June or July. That's how the market's going to go much higher. I mean, everyone's like, well, valuations are really high and blah, 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 blah. You get the financials and tech going together. Whatever the opposite of a crash helmet is what I'd be looking at. Market can really take off strongly, get those two groups going. The GDX, which I did one thing right here this month. I sold it right here when it failed at the 200th day, and we had that bad candle, having bought it here. I did one thing right. But I still don't like gold. I don't like the stocks. I think gold and silver are in a kind of the line in the sand. They had a nice run here. I didn't really hop on board. I didn't really like it and believe it. Although I'm not stupid. If it continued, I'd have to get on board and embrace it. If gold's going to continue to rally, it's got to hold literally right here. If gold has another couple of bad days, I'm going to say we're going sub, going back to 1150, 1140. Silver, kind of sort of the same thing. So this is the week of reckoning for gold and silver. TLT, which is the opposite of TBT, I cover it every week. I have no position, having sold it a couple, 3 weeks ago, and it looks like the bounces are feeble, and it's groping for a bottom, but I don't think one's in yet. The yield TNX, to me, looks like it's trying to move out higher. 230, as you know, is my high range on the year. I was 230 to 150 for the year. Top of the range. I think we could certainly poke above this high of 233, 234, and maybe head towards 240. But if that happens, I think it happens now. I think the yield bulls have the ball, and they can run with it if they want to. So that's bonds, that's gold. Junk bonds, I am long. About as much as I can be long, and it's been frustrating last month, but they do look like they want to go higher, which would also help the stock market. The dollar perked up a little bit last week. Is it ready to blast out? Because I think ultimately we're going way above these highs. Is it ready yet to blast off? I don't get that sense, but we'll see what happens. I don't think there's enough negativity built up yet, but these are a couple of pretty strong candles in the dollar. So we'll see where we end up by next Sunday. Euro, I said it last week, you know, once you rally into this level here, I thought you could play it on the short side. Still doesn't look good. It's hard. It's very hard to be a Euro bull right now. Euro looks like it still wants to go lower, even if it puts in a higher low and then rallies. Short term, it looks like it wants to go a little bit lower. And the yen, I said it all along that I thought this huge, ginormous digestion was not a bottom. I still don't think it's a bottom. I think ultimately this thing falls out of bed again and we go lower. That's the yen. Let's do copper. So last week at this time, I thought copper would resolve itself higher. I love this. Looks so nice to me. Except what happened? Market didn't cooperate. So what do? Well, one, you could have played it in the pattern, be long, and then that pattern you're out. You should not be long copper after here. Or two, you could have waited for a breakout and then played a little more conservatively. I don't care which way you do it. You just have to have tight stops in. So now we're here in copper. To me, it's no conviction on either side. Sit back and do nothing. Got to wait it out now. Wait for a fresh something to set up. Energy. Natty gas I like for a couple of weeks. I don't like the action in the last 4 days. To me, it looks like significant price rejection. So if I did own Natty gas, I'd sell it. If I had no position, I'd stand back and do nothing. I'd even maybe poke the short side on Natty gas if I was more aggressive. The operative word being risk, or words being risk management. You got to have stops in. When these things turn tail and reverse for good, they're going to go hard. Ultimately, I think Natty gas this year is going to close this gap right here, 345-ish. But right now, we got good price rejection. Crude oil, still own it. Still think it's going to hit 65, and that's where I'll look to take some more off. But it still looks okay to me. Let me pause and answer some questions. I kept talking. I forgot to look at the question window. Okay, Rick, I covered gold and mining. If you have any questions, just type them in here. Tony, you have never had a sound issue. I'm the last person you want to talk about with issues with GoToWebinar. I'm clueless. Let's see. Johanna, IYT looks a lot like what you showed us earlier on the Japan chart. Yeah, actually it looks weaker, Johanna, IYT. It's got a much more downward bend to it than EWJ, which more went sideways. IYT is going to really test the mettle of the bulls. Scott Cassidy companies. Let's see. Yeah, so Scott mentioned, we talk about Caterpillar, looks like cup and handle-ish. Deere looks totally different. And it's this kind of action. This does not look like, it's not bullish action, right? Tiny will tell you they trap the bulls. And now they got the bears trapped. And look at this. And they got the bulls. I'm sorry. They trap the bulls up here, and then they trap the bears. They got everybody trapped. I'm scratching my head on deer. I don't really have an opinion. OIH not quite oversold. No, it's not oversold, but it's done a really good job of moving sideways to work off the overbought condition. That's why if OIH has another rally coming, which I think it does up to 42, I think it's going to start pretty quickly. And if it begins to roll over again, you stop out and walk away. Don't, just because I think it's going to 42, don't stand there and wait for it to go to 42. 10. Did I say gold hold at 1200? No, I definitely didn't. I said gold, this is its week of reckoning. It's got to get hold this week. Because I mean, I think ultimately, I still think gold's going sub 1100, maybe toward the 1000. Tan, you guys ask about a lot. Someone, I don't know, I don't follow this right now, but I'm going to start pulling it up. I don't know if this gap was real or it was a dividend or something happened here. Let me see what the volume was. So that definitely looks like a gap down on bad news, but I can't confirm it. So I'll wait till next week to go back and talk about TAN. For JN, question, IYT. Yes, IYT is iShares Transports. Those of you guys asking stock questions, Tiny covers them in a different forum now for our inner circle members. Let's see. Tip. I own tip for one client. Here it is. It's a bad chart in e-signal because it doesn't account for the dividends paid. Here's tip. You look at this, which is the inflation ETF. It's the Treasury inflation. Not a soul alive could argue that there's any inflation looking at this chart. Which has been my case in 2007. And I still think there's no inflation. Let's see what else. I think that's it. We'll go to some grains. So if you have more questions, post them. Otherwise, we're going to the grains. We came into the this week liking wheat, and I'd say you could be long wheat. We're consolidating. Tiny, what do you call this again when it's consolidating moving under a key moving average?
Hold on. Oh, that's a stealth bull flag, but it's not, it's horrendous because of the other ones. We actually have a corn setup trade in the newsletter that comes out for Tuesday's trade. It'll probably be posted tomorrow, but unless I get it done tonight, which I'm not gonna. But so wheat. My take on the grains is that wheat looks the best, and I'm not talking about oats. I'm just doing corn, soybeans, and wheat. We're not doing oats.
I like wheat a lot. I think it's gonna. I think this resolved itself much higher.
Right, but it has to break. If it doesn't break,
here's corn.
Yeah, corn. There's a setup on the newsletter. It's a very predictable setup, so we put it on, even though technically commodities aren't part of the newsletter. There is a column called Commodity Corner if something sets up, and corn is set up, and then soybeans look
garbage. We said that last week, that of the three, beans look the worst. Although let me say this, the commitment of traders reports in beans, you're at some of the most bearish sentiment ever. So, and as well as corn and wheat, but not as bad as beans. You got to look for a bottom in beans the next couple of days to a week. Beans should begin to bottom. And the last couple, the tropicals, here's cotton. There's nothing in cotton at all either way. No opinion. Sugar.
Sugar looks like it's going to that low in that March low.
I think sugar's going below the March lows to new lows. So definitely would play to the short side over the long side. Here's cocoa.
Looks strong.
Yeah, cocoa we talked about last week. So from our, at least from my view, once cocoa broke out, you had to make a choice. Do I hop on blindly, or do I let this move exhaust itself and buy the first pullback? Well, there has not been a pullback yet. Cocoa looks pretty good. And finally, coffee fell out of bed again. That's another one that has really bearish sentiment. So you got to look for a bottom in coffee coming up as well. I think we covered everything. Any other questions? Can you show a weekly chart on beans? I could. Here's your weekly chart. You know, I'll throw a couple up. So here's your weekly chart on beans. you would, in a perfect world, beans would drop down, take out this low quickly, and reverse. Put in a nice double bottom quickly, like this week or next week. There's beans. Maybe we'll get a divergence too in the stochastics. Here's wheat. Wheat's weekly. Looks okay. Divergences. Looks okay. It's down 50%, so I'm not a value player per se in kind of the commodity space, but it looks okay. How the DBA looks. Nothing. And lastly, corn on a weekly basis. There you go on that. I don't really have an opinion on a weekly basis. And that's it. Last call for questions. Last call. Any other questions? Tiny, anything you want to add?
You got 1 day to get this special deal for the inner circle, the lowest price it will ever be offered at. winningedgetrader.com/special-offer. winningedgetrader.com/special-offer.
Hey Scott, I got your email. That Yellen article. They weren't referring to real bearish sentiment in the indicators. You know, who wrote this article? I can't pronounce the person's name who wrote it. But they're just saying the market sold off a little bit. Investor sentiment, meaning people just turned her comments negatively. By investor sentiment, I'm talking about, put call ratios. I'm talking about, fund flows. I'm talking about all the sentiment surveys, that stuff. So I don't think that article that's a bad headline. But thanks for sharing it. Scott, next time I'm paying, I don't know, because kids come first. So I have to find out what my daughter's all-star schedule is for softball first, and then schedule pain around that. And then after July 4th, when softball's over for the summer, I'll probably do it once a week the rest of the summer. VIX, I do look at the VIX, but I look at it when I think it matters, and I don't think it amounts to a hill of beans right now. No offense, no pun intended on beans. There's nothing to look at. It's scraping along. It's not at new lows. It's just going sideways. So it's really, to me, nothing to look at in the VIX right now. No interest. Scott, thank you. I appreciate it. Scott, did you see that new girl on Those of you watching on Pain this week, there's a new girl, I mean, no, woman, I should say, from Jersey who was, I don't know, like in her late 20s. She was naturally beautiful. Not like the normal Fox sexy beautiful, but she was beautiful, very, very, very articulate, incredibly intelligent, had a really nice business model. We were talking about after the show, we sat and chatted. Um, she just doesn't really talk markets. So she was confident and poised and very attractive, but she was just a big, she just kind of big picture stuff. Oh, wow, you weren't impressed. Woo! Wow. Scott, well, you're invited to come. You want to come to Fox with me next time or whenever I'm on, you're welcome to join me. You can go sit and chat with her on your own. I thought she had a great, great business model. And she was like a savant with search engine optimization, which I can't figure out. She said she did it on her own. I thought that was really impressive. In any case, all right. Last call. Rick, I don't know, what's GGN? That's a stock. I don't cover it. Yeah, that's some kind of that's a Gabelli Global Natural Resource. No opinion. I don't even follow that stuff. I'll say a closed-end fund. Yeah, I'm gonna look at the closed-end fund. I need to spend some time on those before I would offer an opinion. All right, that's it. Everybody, thanks for coming on this. Today's Sunday. Yeah, it feels like Saturday. I'm gonna go watch a movie with my wife, have some more cocktails, and then maybe even sleep in for a change. So everybody have a good week. Don't get ground up in this chop in the market. Tiny, you want to close with anything?
That's all. Thanks so much for coming. winningedgetrader.com/special-offer. Have a great week, everybody.